Welcome to Digital Currents, brought to you by Morgan Creek Digital. I'm Xavier Segura. Each episode, we spotlight the topics and people changing the tech industry with a focus on AI, blockchain, chips, and big data. Thanks for listening, and please make sure to subscribe if you like what you hear. And remember, stay current.
Hey, Mark, we're doing this a little earlier than usual because we've got our holiday party, which is one of my favorite times of the year. We get to all gather while we're virtually connected most of the time and then do fun things like help the community, especially North Carolina and all that it's been through, build a couple houses. And of course, Mark, anytime I can use a power tool, it's a good day. So
it is a good day. So, we have for a number of years now swapped the full-on just holiday celebration for a half-day habitat build, and then a little luncheon with the team and virtual members. And it's a blast. I work construction in college. Part of the reason I went back to college because it's hard work, but I do love using power tools, and we'll strap on the tool belts and get it done on Friday. So, because it's not Bitcoin Friday, I don't have the orange pants on, but I do have a sock reveal. So it's harder at the office to get all the way up here, but I have the whale socks on today, which I guess is kind of appropriate. I just picked those out because they were nice and blue, and I wanted blue today. I wanted to go with my Wear Pink Wednesday, but Wednesday seems to be the day that we keep going over 100K. We hit 100K 2 weeks ago, 103, and then we fell back, and then we went back and hit 100K again on a Wednesday, and then we fell back and got all the way down to like 94, and now we're back at 100 again. So, 6-digit Wednesday, I guess, is the new thing.
yeah, and I think it's one of those things, Mark, that we've mentioned. It's going to bump around a little bit. We kind of spoke about it on the last show where it was the first time we kind of broke through that saran wrap known as 100K ceiling. And, that caused a couple of things. It caused excitement in the retail side. It caused some adjustments on the institutional side to some of their future positions. And so now, I think what's starting to happen is this little bit of this clustering, right? Where we had before, there was a clustering kind of like the low 90s. First, it was the 80s and 70s. It's a pretty crazy time mark where we can think about 100K or 0.1 million as the new cluster.
No. I like that, X. Changing the nomenclature, I think is really important. So one is this idea that 100K is not the end. Not at the beginning of the end. It may be the end of the beginning. So 0.1 M Bitcoin just sounds less scary than does 100K. Kind of like when, Berkshire Hathaway said they're never going to split, and their stock price just got it's too expensive. Like, well, you don't have to buy a whole share. You could buy part of a share. And the same thing with Bitcoin. Hopefully at some point, we get to talking about Satoshis, right? 100 million Satoshis per Bitcoin. And, it'd be less than a penny today. So at some point, we'll talk about Satoshis, and you won't buy a whole Bitcoin. You'll buy some fraction of a Bitcoin. But it's the value of the network that you own that matters.
Yeah. And I think one of the things too, Mark, that we were talking about in the last episode, which has kind of come back, we were all on the edge of our seats to figure out what was Microsoft going to do when it comes to their Bitcoin position, right? And so the stock price was kind of, we were joking, monitored very closely by the executives. And so the team has actually voted not to add it to their balance sheet. They were looking to basically take a playbook, Mark, from what we've been saying for years, which is just get off zero. They were going to take 1 to 5% profits, but that was apparently too radical of an idea, too much of a departure. They wanted to go on other safe things like AI, right? Which is quite a risky sort of thing.
No problem putting $10 billion on this risky AI company. Now, it's been a good investment, don't get me wrong, but It's interesting how companies have become cash hoarders.
Yeah.
And really that's not in the best interest of shareholders. And your job as a manager is to take the profits from a good business and redeploy it into new great businesses, not to accumulate this cash hoard. And the real problem with cash, which is the Michael Saylor aha moment, is every day you hold it, the government's stealing it back from you through fiat, through the devaluation of the currency, through this thing called inflation, the stealth wealth tax. So, as a shareholder of Microsoft, I'm unhappy. I'm not so unhappy that I'm going to do anything, but I'm unhappy. But I'm not surprised. It takes courage to do things that are deemed outside conventional wisdom. And usually the way that happens, or kind of the way it happened with MicroStrategy is, investment committee should be an odd number and 3 is too many. So Michael didn't go and ask a whole bunch of people. I'm sure he does have a board and all that stuff, but my guess is it's a little different than the board of Microsoft. And maybe that's not true. Maybe he just has a lot of visionary people on that board and they saw it. But I do think groups have a hard time making those decisions. But the thing that you mentioned it, right? Get off zero. We've been talking about get off zero since the founding of Morgan Creek Digital back in 2018. And we kept saying that the reason for that is there would come a day where you would be deemed fiduciarily irresponsible if you had no exposure to digital assets. So 6 years ago, oh my gosh, you're violating your fiduciary duty if you own this crazy magic internet money. I think the day has come where people are realizing that maybe they're not, keeping their fiduciary contract if they don't embrace. And look, the FOMO, both corporate and government, hasn't even started yet, right? If, and I shouldn't say if, it's when. I mean, Eric Trump, spoke at Bitcoin Mina yesterday, big gathering of all the Bitcoin glitterati with Bitcoin Magazine. And they had a lot of luminaries there. I mean, they had, crown princes and they had, leaders of a bunch of the Emirates, and they had corporate CEOs. They had Ray Dalio. I mean, they had everybody. And Eric Trump gave this, and it was such an inspirational speech. I mean, it was a good speech. It wasn't like the best speech I've ever heard. Eric Voorhees' speeches are way more inspirational. But the point was, he said, we're going to have a strategic Bitcoin reserve. Now, when that occurs, whether it's Senator Lummis getting it through Congress, through the normal channels, or whether, President-elect Trump signs an executive order on day one, I actually don't think that'll happen. Maybe it does. I don't think it'll happen. I think it'll go through Congress. That would be better. But when that happens, that's going to trigger, I think a lot of people believe, a massive wave of sovereign, FOMO and game theory, really game theory more than FOMO. I mean, if the U.S. puts it on their balance sheet and swaps some gold for Bitcoin, you have to. I mean, China's going to have to reverse, and Europe's going to have to, ECB is going to have to do it. The Bank of Japan's going to have to do it. And all of that's in the playbook. We're going to continue to have the cycles. We're going to continue to have the volatility. Now, there will come a day sometime within the next 100 to 140 years would be my guess, right? When the number of Bitcoin that are being mined is really, really small. And so it basically becomes a perfect store of value because there's no incremental supply. And the stock to flow ratio is really, really high. Then maybe the volatility disappears and everybody's going to own it, and it'll just kind of sit there and only go up when the underlying currencies devalue. But we're a long way from there.
So it sounds like we've made a prediction here. Guys, you heard it first. 140 years is approximately when we can expect some of this leveling out. And until then, let's look at Riot, Mark, because they went the other way, right?
Yeah.
So we've seen not just MicroStrategies, but there have been a couple of companies publicly traded that are holding Bitcoin in the balance sheet. Now, Riot is a miner, so they're very close into this world. However, they kind of did something a little bit unorthodox in some ways. They announced a $525 million convertible, which expires in 2030. That will mean a 32.5% premium to their stock price. And basically, this is to buy Bitcoin. It's to buy increased accesses to their mining infrastructure in Texas and Kentucky, which is aligning with political agendas. And the idea here is that it could be, pretty attractive to an investor. More folks are thinking about this kind of strategy. Now, I'll say to your point, if we always, speak about publicly traded companies and, when is their stock price accretive, it's usually when they're doing something right in their strike zone. So you can argue, well, is a technology company supposed to continue to be innovative in technology? I would argue that yes and no. I think not being so public about what they're doing tends to be better and kind of operating in the shadows. And
The convert issuance by Bitcoin strategy, the demand for bonds, and we've talked about this, from boomers and funds that cater to boomers who by law and by decree, their documents prohibit them from owning these other things. And so therefore, it's like the old Doritos commercial, go ahead and eat them, we'll make more. So they keep buying the bonds because the boomers are throwing money into bond funds, and so they need bonds. And so if there's lots of demand for something, the cost goes down. So normally, to attract capital, you would have to pay 4% interest or 5% interest. Well, if there's a lot of demand, well, maybe I'll have to offer 3. Well, if there's a lot of demand, I only have to offer 2 or 1. Well, if there's infinite demand, I don't have to offer anything. I can pay 0, and I can have this funky conversion feature, but I love that because I'm going to go acquire an asset that I believe is going to appreciate. I'm not going to buy depreciating assets. Yeah, I saw this great video, X, the other day of the 2 guys who invented car loans. One guy saying, well, no one would ever buy a depreciating asset with an interest-bearing instrument. Like, oh, no, don't worry about it. It's such a status symbol and everybody wants a new car and they won't even think about the mismatch of assets and liabilities. It's like, no, this will never work. And he's like, dude, you realize there's like $1.6 trillion of car loan debt. I mean, and buying a house, which we were told appreciates, even though houses actually don't, they depreciate. Think about it. Your house actually wears out, right? The wood wears out, it rots, the steel. I mean, the only thing that goes up is the land, but that doesn't grow. So what's happening? The currency is devaluing. So we fooled people into thinking leveraging up real estate was good, but it's just it's a levered form of currency devaluation. Awesome for governments. But buying depreciating assets, property, plant, equipment, trucks, etc., that's a dicey strategy. And you see the highly levered companies, right? That's why it's called high yield bonds, right? If you need that excess debt to run your business, people are like, well, you're not going to have enough money to pay me back. So you got to pay me a lot up front because I might not get paid back. So here, well, if I can borrow a devaluing currency for free and convert it to an asset that by the nature of that devaluing currency goes up, I mean, It's literally genius. And it's very, very different than people are calling it a Ponzi and people are calling it a pyramid scheme. Like, no, you're missing the point. Now, it's not infinite because I say there's infinite demand for bonds. There's really not. I mean, yes, there are German pension funds and U.S., government demand, but it's not infinite, but it's big. And so you can do this. And then the other part of it is, the the way the security works is you don't get like extra over collateralized security. Like if you go to Arch Lending, a portfolio company like us, and you pledge your Bitcoin, they'll lend you 50 cents against it. So you're 2 times over collateralized, right? So the lender is really protected. Oh, that's not the way it works here. You're not getting 2 times. You're getting half or a third of the underlying assets securing, because these are, in many cases, well, in Michael Saylor's case, I didn't see the Mara documents, but in Saylor's case, they're unsecured, right? They're a general obligation of the company. So if there's anything left over, you can get paid back. But I don't think it's exactly, I think it's like 1/3 covered. So,
but to your point, Mark, the interest rate is 0.75%, right? And maturing at 2030. So even though we're coming down, I think the CPI was kind of mixed in terms of some of the latest results here. This is kind of going to give the folks who believe in something like Riot should absolutely be all over this thing. Because this is basically just reemphasizing, hey, you have a way to get an added premium on something that your company's already doing. And, obviously is going to help in the long term anyway. So you kind of have 2 potential revenue streams for an investor. And kind of pulling apart another quick story on BTC or on crypto rather, area that we look at a lot in the Middle East. We talked about the MENA conference. So Tether was recently approved as a virtual asset in Abu Dhabi. And I think it's interesting because I think in the US, we're taking our idea of what's to come when we look internationally. We always speak about how, things have kind of gone global. Maybe they'll come back into the US as being kind of the real kind of leader in technology. But we've seen other places in the world actually create regulatory bodies to create policy specifically for digital assets. Now the U.S. is speaking about doing the same thing and have kind of made some movements to do that. And now we're seeing, obviously, with stablecoins really kind of coming into prominence globally. And here, what this will mean for Abu Dhabi is just broader acceptance into the financial ecosystem. So the idea is that you can now kind of plug in very seamlessly 24/7 using stablecoins. And basically enabling all of these different financial players to exchange with one another, pretty much frictionlessly, right? And so the market cap of Tether is 138 billion, so it's pretty large. I thought kind of interestingly, Mark, and kind of curious to hear your perspective on this. I can envision a world where I can see somebody like a Tether or Circle kind of being this dominant stablecoin player, but then I can also see a world where they're like regional incumbents, will you call them effectively a centralized digital currency by another name? Potentially, right? But I think this is showing the playbook that it's, okay, first you create the body, then you create kind of the least offensive cryptocurrency as a medium method of exchange. So I can see the U.S. totally going down this path in like 6 or 12 months once the new administration's in talk.
Look, I think that we're well on the way. I mean, look, we have a Secretary of the Treasury who is, he's not a Bitcoin person. I mean, he's a hedge fund guy, but he's a proponent of digital asset technology, and he gets it. Scott's a really smart guy. Then you've got, Secretary of Commerce, who actually is, kind of a Bitcoiner and a crypto guy, and just bought, 5% of Tether. Through Cantor Fitzgerald, which is I think it's the world's largest government bond dealer. So there's some interesting tentacles there. Then you've got the new head of the SEC, who's a total crypto advocate, and I think is just going to open the floodgates. But the real big one, to your point, is David Marcus. And it worked on the Libra project. Wanted to bring a stable coin to the masses. And he just came out about the story that they would have succeeded if not for the U.S. government under Gary Gensler and Elizabeth Warren, anti-crypto army, basically debanking them. And the story was, Facebook wanted to create Libra. There was to be this private stablecoin, almost like a CBDC, not really a great thing, but not evil like CBDCs. So kind of a hybrid between open source Bitcoin or Ethereum or whatever, or even Tethers or USDC, and a true surveillance system. But Libra was going to be a private, permissioned, but it was going to go to 4 billion people simultaneously. And it was like a gateway drug, right? If you're forced to open a wallet and get this and use it to reward people for cool pictures or good content or tipping, or, oh, maybe I'll buy a cup of coffee with it, or, oh, hey, maybe I'll send it to my cousin in Abu Dhabi. Wait, it settled overnight on Sunday? I mean, that's unbelievable. And here's the thing. I had this epiphany, right? That, when I was buying some NFTs years ago, the first time I did an NFT transaction sitting in my pajamas on a Sunday morning, banks aren't open, brokerage firms aren't open, markets aren't open. And I was able to buy, thousands of dollars or move thousands of dollars around the world instantaneously. Like, wow, this is really cool. And it is really cool. And it's really, really powerful. And it's coming. And there's no way this technology is going back in the bottle. There's no way we're going to stay on the SWIFT system where they use fax machines and physical pieces of paper. There's not. And the incumbents are going to try to delay the inevitable move, and they're going to try to bring in, like you've seen, part of the reason Cardano and XRP had these big runs in the last month was their two founders were like, hey, we have the lead to help, the incumbents not get displaced by Tether and USDC, and we'll help them on our rails. Like, yeah, but your rails don't really work that well, from what I understand. I mean, that's just, from what I understand. And don't hate on me, all XRP Army and Cardano fans, but I think what people are realizing is, yeah, there's a lot of hype and it sounds, and the thing that bothers me about both of those two is you got the foundation that owns such a big chunk. It doesn't take much for the liquid float to move a lot. And that's not a fair and balanced system. That is that benefits the founders, Charles and Brad, more than it benefits the armies.
Right. Well said, Mark. And I think probably the big story that we wanted to chat about today is the breakthrough with Google and Willow. And what we were speaking about earlier about, kind of tech companies needing to decide kind of what areas of investments are going to be both allowing them to compete and not getting battered by shareholders, which are not always the same complementary thing. So basically, for those that are unaware, what Google is trying to do is, like many companies, continue to be relevant in this new age of computing known as quantum. We're still many years away from that despite the great breakthrough here, but basically they've released this new chip. It's called Willow. It's got 100 qubits, and basically it's done two main breakthroughs, Mark. It surpassed this quantum error correction threshold, and it's starting to show that basically their quantum performance is vastly superior to classical computing, which has always been the idea, right? Even the word quantum leap, versus what we have in the traditional PC is kind of a no-brainer. And I guess they gave a little bit of an example where they gave Willow a task, and then in 5 minutes it was able to complete this task that the fastest supercomputer would have taken, and I love this number, let me say it clearly, 10 septillion years. So basically an infinite amount of years.
But this is classic clickbait marketing. I mean, I hate to say it that bluntly, but that's what it is. I mean, yes, if you set up a problem that is designed for a certain type of process that a traditional computer, a binary computer that has ones and zeros and has a processing, sequence and is accurate. See, this is the part that that's lost in this hype of this story is the reason it would take, a septillion years is because in order to have accurate calculations, you can't make mistakes, right? If you say 2 times 2, the computer has to give 4. It can't give, a range of 3.6 to 4.2.
Mm-hmm.
Well, what are you talking about, Mark? Well, a quantum bit, a qubit, is a range of outcomes. It's a vector. Okay, what do you mean? Well, a bit is binary. It's on or off, plus or minus, one or zero, right? And so a qubit is a range of outcomes. It's a vector of a certain number of numbers. And okay, that sounds interesting. It can be many states all at once. Yeah, that's kind of thing. Well, why is that good? Well, if I have to multiply 2 numbers, and then I have to put the resulting number in a matrix or vector, and I got to do that computation over and over to get my to get my vector, and then I got to create a bunch of vectors to create a matrix, and then I got to multiply the matrices. It's going to take time. Well, if I can have my vectors immediately, and I can create a matrix really quickly, and I can multiply them really fast because this quantum state, this speed of movement of the electrons. Long story short, the problem is errors. Well, where do the errors come from? Well, if you think about a quantum state, meaning you're both a 0 and a 1 at the same time, and so there's a picture of it today on Twitter, the yin and the yang of, and it's called quantum interference in the sense that the electron isn't in a certain state. It's captured in an infinite state. Well, if 2 of them are next to each other, well, they're throwing off fields and they literally interact and they cause noise, and it can change the outcome of the calculation. Well, that sounds bad. If the calculation has to be accurate, changing it in mid-calculation seems bad. So yes, it's really fast, and yes, it did this brute force task in 5 minutes. Now, it doesn't do anything for us. It's not like calculating 2 big numbers.
Yep.
But all that said, it is great that we have qubits that exist at room temperature. So that's a big deal, because for the last 20 years, to make a qubit, you had to cool the physical machine to like minus 400 Kelvin or something. I mean, it was some crazy, and that's why the IBM, computer cost so much money. And then a bunch of people figured out how to bring it to room temperature. Okay, that's better. But here's the thing. A qubit is not a logical qubit. A qubit is this quantum bit, but you need not 105, but about 2,500 to have a single logical qubit that is able to get an actual answer, as opposed to a range of outcomes that you might have the answer in there. So 105 qubits, kind of like having a 286 computer from 1991. Okay, that's better than not having it. And it's a step on the way to having a Pentium machine and ultimately, an M4 or whatever we're working with now with GPUs and CPUs. But that's a long-winded way of saying 105 is not 2,500, and 2,500 is only 1, and we need thousands, maybe even millions of logical qubits to get a computing power that would be capable of even approaching the idea of breaking SHA-256.
Yeah, and I think that's the critical point here, Mark, because we saw kind of two things happen when this announcement came out, and kind of to the point of, is Google or other technology companies, are they kind of pursuing the right horse is one thing. And the second thing is, what do the shareholders think about this? I'm not saying that it is causal, but Google's share price went up 5%. Also, I'm not saying it's causal, but Bitcoin's price went down roughly 5% yesterday on the kind of fear that this might pose somewhat of a threat. So they're dealing, Mark, with, about 100 qubits. And the idea here is that they will try to go to 1,000 physical qubits per one logical. And so that, is a big jump. But like you said, the challenge with quantum now is it's a solution without it's trying to solve a problem that isn't a real problem for most consumers. So it's one of those things where you have to train quantum to do a very specific thing. So there are some breakthroughs in quantum today, for example, in certain smart cities. So when you're dealing with things like accelerometers or gravitron, where you can kind of know where you are for oil and gas and military applications, like we are using quantum today in different mechanisms. But this idea that it can be this all-powerful, almost oracle, to go back to your Matrix example, somebody who was there, it's like, well, if I am the father of the Matrix, you would call her the mother of the Matrix. It is not that. It's something where to get to the point of quantum supremacy, you would need millions plural, to be able to kind of approach this level. And so I think once the market kind of realized that, Bitcoin recovered, Google's kind of still stayed where it's at. So it will be hard.
Yeah, I mean, to that point, my son-in-law, sent along the story, and it's like, oh my gosh, this is pretty amazing. And I said, well, it is an amazing marketing stunt. And he said, yeah, probably the most profitable in history. I mean, 200 billion of market cap on a headline.
Wow.
I mean, and let's just think about it. 200 billion is bigger than like 450 odd of the S&P 500. I mean, might even be more, might be like 480. And that happened in minutes on an announcement of something that arguably, to your point, is a solution to a problem that doesn't exist.
Right.
I mean, you can't take that 105 qubits and crack my password to get into my Apple ID. That's not going to happen. You certainly can't crack a Coinbase account. You certainly can't crack SHA-256. You can't get the nuclear codes. I mean, yes, you can calculate esoteric math problems faster. Yes, you can do that. Fine. And that there's value in that. Don't get me wrong. But that's like most of scientific development is in the earliest days, it's the pursuit of incremental success for the pursuit of incremental success, not for any practical application. And then we have the aha moment. I mean, think about the internet, right? The internet, and it's funny, I have a book in my bag. Actually, I'll show it. It would be a prop that I found this in my, says the emerging internet, and look at the date. So that has been in my office drawer, in the back, for a long time. So 26 years. And, yeah, is that right? 1998. Yeah, 26 years. So 26 years I've had this book, and it's been probably 25 years since I read it. And I found it. I was looking for something in the closet, and I found it. I pulled it out, and I'm going to read it this weekend. And it'll be interesting to see what someone in 1998 was saying about this newfangled thing that, was started in 1996. I'm like, it was started in the 50s and 60s, but it was only one or two computers that could kind of talk to each other. And then at the height, right before it became the internet, DARPANet was like, I think 5 or 6 sites around the US. Wasn't global, and client server technology was really clunky and dial-up modems were really clunky and everything was slow. But now here we are talking in HD and you look unbelievable with the 1080 camera. I'm never getting one of those. I'm ugly enough at 720, but holy moly. It's interesting how this technology, I mean, it's literally like SpaceX blowing up rockets. Like, well, what does that do? Well, each incremental blow up, you learn something and you get closer to the ultimate goal. And, I don't know. I've told people the story that I got in the argument with ChatGPT about, can we go to Mars? And it was like, yes. And I'm like, well, no, we can't. And he said, well, yeah, technically you're right, but in theory it's possible. And well, no, actually it's not even theoretically possible because of these three things, the biggest being the atmosphere is so low that you couldn't propulse yourself back off. Well, while technically you're right, Elon's working on it. I'm like, hey, great. I thought it wasn't even Grok said that, it was ChatGPT. But it's, that work is valuable and it leads to other, inventions and other applications. And it's that all of a sudden aha moment where we think about cryptography. Cryptography was around for a very long time. It was demonized, right? I mean, governments were all against any form of cryptography. SHA-256, was invented by the government. They did not want private use. And you were like a criminal, like you could go to jail. You encrypted something. And the cypherpunks were like literally way out there on the fringe.
Right.
And, the Crypto Anarchist Manifesto, which was written in 1988 by Tim May, basically outlined everything that was going to happen over the next 30 years. To 2018, like literally in detail. It wasn't even that long a document. He said the governments are going to fight it, financial institutions are going to fight it, but it will eventually be successful and it'll become the dominant standard. And he was right. But it's not like Satoshi magically invented it by him it's himself. He self-identified once as a he. So there were a lot of people and a lot of work that went into that overnight success. It's just like, we have to give Clippy its props for the current day AI.
That's right. Clippy gets a bad rap, but we know the original OG of AI was Clippy, and I think he's due for a comeback. And to your point, Mark, to close out that news story, it's the biggest kind of knock. And we speak to a bunch of quantum experts on a weekly basis, which is a great way to learn about this stuff and kind of separate the wheat from the chaff. The biggest blocker, much like you were describing in those early days of cryptography, is human capital. To be able to advance this kind of technology, there just aren't enough brains in the world to be working out this problem once, which is why startups have a very big advantage here.
Carl X, I mean, the thing I love the most, by far, about our job, I say this all the time, we get paid to talk to the smartest people in the world. And that was true when I was just an allocator and I allocated capital to hedge fund managers and private equity managers and venture capitalists, and that I met Nobel laureates and I met these amazing masters of the universe. I mean, orders of magnitude exponentially different today when you and I are on a Zoom with this guy the other day, this quantum expert. I mean, it was so unbelievable how smart. I mean, how fast his neurons fired, how quickly he could assemble it. I mean, a couple of things I took away from that. One, no computer is doing what he can do in his brain. No way. No way. I mean, it was top 10 smartest people I've ever talked to. I mean, unbelievable. And it wasn't, we've all been there with it sounds smart because they use jargon. No. This was simple language, actually explaining stuff, actually taking I mean, it was unbelievable to watch.
It's a point where you see that It's just takes this years upon years of working on a problem. And I think with quantum startups, I'm seeing, Mark, that there's a big difference from a classical startup, which is I worked at X place, I discovered something, I'm trying that sort of model for a net new industry and trying to kind of change with monitoring. No. With quantum, it's I have been working in quantum for 20 years. I have my need to pay back my loans. So I'm going to create a company.
No, exactly. And, we had a similar experience. I said, we talked about with the kid in photonics. I mean, this kid is like, all he thinks about is alternative materials. Like literally, is silicon the best thing for semiconductors? What about this gallium arsenide? Or what about this, so amazing, right? I mean, that's a pretty narrow field, but so laser focused.
Yep.
But he had a breakthrough.
Sure.
And it is actually related to this quantum stuff and this idea of the difference between processing words linearly, right? That's what CPUs do, code, to processing parallel, so the GPU does, to processing in 3 dimensions and multiplying matrices, which I don't really remember, but now when I see people explain it, and just the mental acuity, human mental acuity it takes to intuit the next step, mind-boggling. And yet that's how all progress is made.
Yep.
Yeah, I still marvel, right? The first person who got on a boat and sailed into the horizon. I'm like, really? I mean, come on. I mean, that seems to a human like me, it's not a very good idea. Probability-wise, not a lot of good outcomes, some really, really, really bad outcomes. And I sure when I say that, everyone's thinking Christopher Columbus. And no. I'm talking about the Egyptians who got in the little reed boats, open like canoes, that they've found in Arizona. Like, who was that guy or gal? I mean, that's some serious bravery, some serious innovation, some serious desire. And, now we have, supersonic jets from those humble beginnings.
Incredible. So we've got, Mark, on the chart of the week, to kind of bring things back onto the Web3 crypto side, what we're going to show, and let me know if you can see my screen, is graph. And I'll say, for those that are on audio only, we've got YouTube. Even though we don't have our Bitcoin Friday swag, we always have a couple of tricks up our sleeve. So here, what we're showing, Mark, I'll describe on audio, and as usual, get your thoughts and reaction. This is a chart of the last couple of years that's showing trading volume market share between centralized exchanges and decentralized exchanges. And so when you think about the movement pattern here, in the beginning, it was almost, I'd say about 97-ish% in a centralized exchange. And that's kind of been shifting over the last couple of years. Centralized exchanges are still a dominant way that we're, trading, but it's not the way that, let's say, a Maxi would want to trade, right, Mark? They would want to go fully decentralized. And especially if we think about kind of the government's role in this, they're certainly going to play the role of kingmaker about which of the centralized exchanges will be greenlit. So, Mark, what is your reaction to some of this chart? Probably some of this you already intuitively know, but this is fresh data. This came out about the overall share as of this past month.
Yeah. So I think, for those who are following along audio only, I will paint the picture. So this is a chart of the last, 4+ years from 2021 to 2024. And it shows basically that, there's a teal color that dominates the left-hand side of the chart, and then a kind of dark blue color starting to creep up along the bottom. And, went from, 2-3%, like X said, in January 21 to, the DeFi summer peak, and it was actually DeFi fall, and we got all the way up to 10, 11%. And look, that created some multi-billion dollar tokens and made a lot of people rich, and people invested in firms like Parify and others who were early on those decentralized plays. A lot of people were playing on, these decentralized exchanges like Uniswap and et cetera. And that was a big deal, but it only got to 11%. And then we had the crash, we had the bear market, and, but it didn't trough all the way back down to zero, kind of stabilized about down 50%, which was actually better than the prices of the assets. They were down, 74. And then we've had this kind of slow and steady re-engagement with these decentralized exchanges to a interesting peak in this summer, in summer 2024, where we got almost up to 20 briefly, and then we've kind of fallen back down steady state around that 10% level again. And so what this says to me is good technology doesn't die, right? There are no examples of technology whose time has come where, the incumbents succeed at putting it back in the bottle. So yes, the centralized exchanges would like the decentralized exchanges not to exist. They would like to play that role like the banks and brokerages have for 838 years in the TradFi world. And I think what this shows to me is what we talk about in the multi-step process. So TradFi had 838-year run, and it was glorious for the banks and brokers, and $7 trillion of annual revenue is awesome. Then CeFi, centralized exchanges, came in and said, well, you don't need to trust these big TradFi institutions. You can own these decentralized assets. Well, you do have to trust us because we're going to be that centralized in between, but we'll be better. And I think they are better in many ways. And they dominated that interim period. And, we are at the knee of the curve of the S-curve of adoption of digital assets. So we spent, I'd say the first 4 or 5 years, it was like a science project. It really didn't, we weren't sure it was going to exist. The last decade has been the first kind of 10% where you get to 10, 11% adoption. Then you get the next decade where we literally get 80%. Let that sink in. 10 years, you get 10. Next 10 years, you get 80. And you just have this explosion. And then the last, 10, 20, 30 years, you get the final 10%, the laggards. And like I said, my dad still doesn't have an ATM card and never will. So there will be some that just hold out. But ultimately, Peter Schiff will never own Bitcoin. I mean, maybe his son does, but he never will. So this says to me that decentralized is an idea whose time has come. It's still tough for a lot of people to go all into the bearer asset world because it's complicated and the UI UX is still not great and it's tough. I mean, it happened to me. I mean, only $10, but $10 is still $10. Guy sent me $10 of USDC on a Phantom wallet. I either didn't write down my seed phrase or I wrote it down and lost it. I don't know what happened, but I can't get to that Phantom wallet. And so that $10 is gone forever. That's not a good situation. Now, no different than if I dropped a $10 bill on the ground and someone else found it. That's the same. But there's just a reticence when you combine easy to access tech with bearer assets that people get a little funky because for hundreds of years, we've been able to trust someone else to take care of it. Like my money that's in the bank, it's not my money. That's the little glitch. It's not my money. It's their money. But when I want it, every time, touch wood, every time I've wanted to get it, they make it available. So I don't have to worry, did someone go into my house and steal money out of my safe? I mean, I don't keep any in my safe. So, I mean, I have a little frictional money, but don't rob my house, right? There's no money there. But there are people who want to control their wealth and they're afraid of the centralized industries. But I think what this says is in digital, so many people are more comfortable letting someone else manage the complexity until such time as the complexity is easier.
Yep, no doubt about it. And I think you hit the nail on the head, Mark. And I think the idea that there will always be this holdout for the alternative or the avant-garde of a financial system, that'll always be there. And technology will just enable that. And I thought it was so funny that, even Brian Armstrong, the CEO of Coinbase, he has made many overtures towards DEXs over the years. He's even, acquired and invested in companies like I think it was Paradex, where he was basically offering a DEX, but that was outside of the U.S. So I think, Coinbase is going to continue, in my opinion, Mark, to be the big winner in the upcoming years, especially as more institutional investors and retail investors are going to need just something that they're comfortable with. So I think that, that's a good place.
With one caveat, again, and we were investors in Coinbase, and we love Brian and the team there, and we wish them all the best.
A good point that we'll probably end on, Mark, is this idea that, listen, the market share is just not necessarily going to be something where it's going to be a winner take all. Just the entire pie is going to increase, right? So there's going to be different companies that will fulfill certain niches. So I guess with that, we'll probably wrap up and remind our listeners, as always, check us out on YouTube, rate, review, subscribe. We appreciate everybody, especially as we kind of get to the end of the year. We'll probably only have a couple of episodes left. I can't believe it, Mark. We're going to look at 2025. I think I've been thinking about 25, though, for at least a couple of weeks now. So,
yeah. Now, this year, I heard someone say it best, and it was January, February, March, April, May, June, July, August, September. Ever since May, it's like been a blur. 4 months, waiting for the ETF approval and the halving. Oh my gosh, the halving. Since the halving, it has just been a blur, and here we are getting ready for the holiday season. We wish everyone the best. We are so grateful. I mean, we've just had Thanksgiving, so we give thanks to everyone who has coffee with us on Saturday morning. It's super gratifying to have y'all as friends and colleagues and partners on this journey. So thank you.
Absolutely. Well said, folks. And as always, remember to stay current.
Thank you for joining us this week on Digital Currents. Check out our links to our website and social media in the show's description box. Please make sure to subscribe if you like what you hear. And remember, stay current.
This podcast should not be construed as investment advice nor solicitation for the sale of any security, advisory, or other service. Investment themes and ideas discussed may be owned by funds managed by the host and podcast guests. Any conflicts at the time of production have been mentioned by the host but are subject to change. Listeners should consult their personal financial advisors before making any investment decisions.